Trade Pros? Welcome to our morning market update. Hopefully you guys have had a wonderful weekend. This is George Pops out Trade Pro Academy, and we have a great update for you today. Hopefully you got some rest. You're ready to rock and roll after 2 days off. Halloween's over, and we are in November. This is the first trading day of November, ready to rock and roll. Let's get it. Actually, yesterday was the first trading day of November on the futures reopened, but it's our first morning market update of November, so we'll call it the first trading day as well. All right, first thing is I'm having platform issues with Sierra Charge today on my behalf. I'm on the phone trying to fix it, and I'll be on the phone after this update to do it, but which means I can't really give you trading levels today or a trading plan because I haven't had a chance for my platform to load. I'm trying to fix it ASAP before the day opens, but we'll see. Maybe it's just a sign for me personally to not do anything today, which is a bummer because today I was going to screen share some order flow scalping stuff and walk the team through it in the trading room, but sometimes the market gods have other plans for us. All right, today we're talking about tariffs, tech, and tensions, the triple T. Global equities are up today, 0.3%. The S&P, NASDAQ, 0.5 percentage point. Europe, steady on China-EU trade progress. Donald Trump says he would love to drop the 10% tariff on China, but won't allow Beijing access to NVIDIA's most advanced chips, the Blackwell. Gold nearing 4,000. All right, there's a few Fed speakers today, Daly and Cook on deck. And the focus of the week is ISM employment, all right, which we're going to get in focus with no non-farm payrolls this week. We were supposed to get non-farm payrolls, but we will not. I was listening to some podcasts on the weekend as I was driving, and one Bloomberg analyst was saying that because the government is shut down, they may not even be tracking the employment data. So there's a bigger likelihood than not that when the government shutdown ends and all the different departments reopen and we can start calculating reports and economic events again, we actually won't get a backfill of the reports numbers. It'll be a gap. So it'll be the last one was before the shutdown, and then the first one will be probably a month and a half, two after the shutdown, because they got to get process back in place, etc. So there'll even be a delay in the first one being reported, even if it opened today. All right. Because they need some time to recalibrate everything and get things going again, which means we're going to just have a hole in this data, which is interesting, right? I don't think they're going to backfill and release the data we've missed. I don't think they can because they may not have captured it, is what this report was saying. All right, here's the week ahead. The week ahead is ISM manufacturing and Treasury's Q4 borrowing estimate. That's today. All right. Tuesday, we have an RBA rate decision and French budget vote. That's overseas, not as relevant to the market. Wednesday, though, we have ISM services, ADP jobs, and a Supreme Court tariff hearing. So Wednesday is the big heavy day for the week. All right. And, ADP jobs is a private report. And so it's very close to having non-farm payrolls. It's not the same, but there is a lot of strong correlation, and ADP is often used to kind of have a first look at the jobs report, and then the non-farm payrolls print kind of fills everything in and makes it official. All right, but ADP is kind of like the first look. So since we don't have the full look, all we have to do is focus on the first look, and they're not really that important, ADP jobs reports, but I think they could be now that the government is shut down. So watch for that. Wednesday, big day. Friday, University of Michigan sentiment. Again, another private release because it's a university. And that's going to be interesting to see. All right, what to watch for on the ISM reports. Watch for service prices, all right, and employment. That's what's going to steer kind of the rate cut odds for December for the Fed. Because, look, we don't have anything else. Even the Fed is lacking this data. It's not like they have it and we don't. All right, so now what we're kind of anchoring to, and this is a big pro tip right here. You probably won't hear this anywhere else. But the things we're looking for now, aside from the usual suspects that we don't have, and during the shutdown, is strong ISM services. Anything above 55 is growth. 50 is that like 50-yard line, all right? 50 is advancement. Anything below 50 is decline or contraction. So 55 and above is a strong print on ISM services. with firm prices could delay some of the Fed cuts because it is kind of one of the only strong indicators we have of the economy, and that's something to watch for. Okay, so put that on your calendar. What day is it? Wednesday. All right. A lot of earnings heavyweights this week as well. We have AMD, Qualcomm, Palantir, Airbnb, Uber, and Block all reporting. All right. The focus is squarely on AI chips, tech demand, and consumer strength in travel and spending. That's kind of what we're looking for this upcoming week in earnings. Thursday is the volatility peak. Multiple mega caps are reporting. That's after Wednesday's economic event. So Wednesday, Thursday is that time of the week where you're going to see the movement. Okay, Monday and Tuesday is going to be a bit of a slower start to the engine. You know, it's going to crank and turn over, but it may not fully fire until mid-morning Tuesday. All right, and the theme is, can AI and consumer momentum keep fueling this rally? All right, here's something. And look, I'm not an alarmist guy. I'm not always negative. I'm always positive thinking, to be honest with you. But there's certain things that when I see, I have to bring to your attention. Because, and this started for me all the way in 2008, 2009. 2009, I started working for Scotiabank in September. All right, Scotiabank hired me as a trader and customer service. All right, I started the customer service role in the trading desk, and I worked towards getting licensed and officially becoming a trader later on with the company. But I remember being at the trading desk doing customer service, and I remember the stories of the people, because before getting this job as a trader, I wrote a blog post. The blog post was called gettingmarketmoney.com because I was young, I was arrogant, and I needed a name that reflected who I was. Gettingmarketmoney.com sounded like a great name. All right. And I was genius for coming up with that. So anyways, when this blog, I was posting a lot of stuff, mainly Forex focus, because that's what I was doing at the time, foreign exchange. But I was posting articles telling people in 2007 that the housing bubble was a sector that looked troublesome, and if anything happened, this is where it could be. I said, don't panic, but keep a watch for it. And then we know what happened. All right, and then now think about this. This is in 2007. I'm not employed at Scotia. Now I get a job at Scotia, and I'm taking phone calls on the trading desk from these same clients who didn't read the article, more than likely in 2007, who are now sharing these stories. Oh my God, I lost everything. Oh my God, I lost my life savings. Oh my God, I did this. Oh my God, that. Getting the police called on people who were making threats against themselves and others. It was a dark, dark time at the trading desk to start my dream, quote unquote, job. All right. After having posted this blog, which my compliance officer later found out about and did not like, which led me to leaving the company and then focusing on what became TRADEPRO Academy. So, that's the whole story, and it's great. But I'll tell you this, the truth of all this is, it wasn't like I was alarmist in 2007, and I'm not taking credit for I called it. I don't care about calling it. It's your job to call it. Me calling it has no impact on your portfolio, and it shouldn't, because if you're putting your money on a position that somebody else called for you, who are you going to call when the position goes south? You can't call them, right? So, look, what I'm trying to tell you is, all right, this AI thing, okay, yes, there's a lot of growth, there's a lot of positivity, there's a lot of expansion. It's starting to smell a little bit funny, okay? I'm here to ding the bell a little bit. And again, I'm just giving you another alternative point, and it's important that you take it. All right, first, the short term is that options data is showing very extreme positioning. All right, the call skew on the Mag 7 flipped to positive, all right, for the first time since last year. What does that mean? What that means is that traders are paying more for upside calls than they are for downside puts. All right, and that isn't typical. That's not normal. You're supposed to pay more for the put because you're more afraid than you are optimistic. Therefore, you're willing to pay more to protect your downside than to get the upside gamble, right? So when skew flips like this, it's often signals that there's just overcrowded, euphoric optimism. And that's historically followed by short-term pullbacks. Again, see, I'm not being alarmist here. It's a short-term thing. All right. As dealer hedges and volatility mean reverts back to normal. So think about this. Mag 7's dominance right now is hitting new records. It's making up 42% of the S&P 500 total. All right, the highest in history. All right, volatility skews have flipped. The positioning in these stocks are enormously to the call side and to the upside. And all I'm saying is maybe there's a window here to take a little bit of profit. It's starting to smell funny, and doesn't mean it's over. Something smells funny, it could always smell worse, but just keep your eye out on it, because I'm here to give you the other part of the conversation that's missing in the marketplace too. In fact, this is what TRADEPRO Academy was founded on. Love you guys. Hope you enjoyed this. Come on out and check out our trading room. Just don't sign up today because it's going to not be great. I'm just kidding. It will be great, but I probably won't be able to do what I intended to. What I meant to say is don't sign up today hoping you get what I was hoping to give you, because it won't happen today. It looks like due to platform issues. I'm going to hand it over to the fatty in the trading room, and it's going to be fantastic because he's a great trader. And I'm going to have to make some phone calls, try to get this thing working at least for tomorrow. So some tech issues plaguing me, and it's great because today I had the opportunity to kind of step up and do it. I'm going to miss that opportunity. So there you go. My Monday is starting off that way. I'm going to turn around and see if you have any questions. I'll screen share to show you what I've been seeing, but it's not much. And you'll see that now. Look, so I have, let me move this a little bit over. Oh, what am I moving? Let me move this on top. That should work. All right. Well, no, it didn't work. Okay, well, Bob's your uncle. He's my uncle too. See, look, you have the DOM. That's what I'm trying to tell you guys. You have the DOM, but it ain't moving. There's no data populated. And it's as of this morning when I opened it. And if I close the platform and reopen it, it'll populate with the freshest data, but there's no circulation. The blood flow is cut off. There's no contracts. There's no depth. There's a problem. All right. So I got to go get that fixed. So I can't give you levels or anything, but I got my eye on you. Let me just move this down. I got my eye on you today. So don't you dare mess around in this market. You guys keep it tight. Have a great rest of your day. I'll see you tomorrow. Things will be improved, and we will, again, meet up and have some fun. So MS, thank you. OTM, appreciate you guys. Have yourself a wonderful rest of your day. Thanks for tuning in. Tomorrow we do it again, 9 a.m. Love y'all. Take care. And it's a sign, right? I think it's a sign. I think so too, bro. I think this is the sign it's giving me. It's like, it's telling you, look, take it easy. And for you to go and force it and fix it, you might be proud of fixing the issue, but then, it's a sign. You got to take the sign. Thank you. I actually appreciate that message saying don't trade today, G. I'm going to listen to you. How about that?